In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Hello and welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and you made it to the end of the week. Coming up next, we have Donny Gilbert giving us a broker update. I'll be stepping in for some shipper talk, but first, a word from Zach Strickland with a carrier update brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by Powerfleet on this Friday. Congratulations, you made it again through another week. So what happened this week? Well, we fell right in line with last year. So tender volumes right on par with last year, approximately about 0.6% up year over year, 96.90 on the OTVI. Now, this time last year, we were preparing for, this is January 23rd right here, we were preparing for a pretty significant drop in outbound volumes across the country. So you see this big trough right here. This is the third week in January, traditionally one of the slower times of the year compared to, just non-holiday volumes in general. So you see this trough right here was, of course, the holiday period. We're not going to compete with that, but for a non-holiday type of event, third week in January is traditionally pretty slow week. So we're preparing for that next week. We should see those volumes drop off a little bit. We'll see how that makes sense year over year. But let's see what the freight mix looks like in the country year over year, because even though volumes are on par, if not even with last year, the freight market is dramatically different. We've shifted some of those volumes to the East Coast from the West Coast, looking at the outbound tender volume index heat map behind me. So anything in the top right is going to be your larger markets, big volumes. Bottom left going to be your smaller market volumes in general. So the red indicates a year-over-year decline in volume, and that negative 26.6% you see there over Ontario is a 26.6% decline in year-over-year volume. 5.6% down in Atlanta. Harrisburg, Pennsylvania, however, is 9.5% up. Elizabeth, New Jersey, the big winner this year at 35.3% year-over-year increase. Of course, we've been talking about this for the past several months, where we've seen a lot more volumes move to the East Coast. The port of New York, New Jersey, really feeding a lot of this volume. That trade war situation that we've been talking about, the Los Angeles port, starting to see a lot of that volume decline year over year. So East Coast looking pretty strong in the bigger markets of Allentown, Harrisburg, Houston again, and Dallas starting to show back up after having a pretty quiet year last year. If you look over here on the smaller market side, these are going to be your, the bottom half of the markets. A lot of green over here. So a lot of these smaller markets are starting to emerge back out of their hibernation from 2019. This is a pretty good sign for carriers out there that are trying to rebalance their networks. You don't want to be too heavy in some of these bigger markets across the country, especially when a lot of that volume is coming off the West Coast and just sitting there. So you're going to have to operate regionally, and it's going to take you a longer amount of time to get across the country. Some of these smaller markets, of course, are spread throughout the country. So this is good news for carriers moving into 2020. So even though we are flat year over year, we have some redistribution of freight occurring throughout the country. So a market I want to point out right here, because we do have some weather coming into this part of the country this weekend and today. So the Joliet and Chicago market, you can see these guys have not had a great year, and they are continuing to show declines year over year. So the Chicago market itself looking pretty weak, but it is starting to pick back up here over the last few days, although we don't expect a full-time recovery, especially now that we see this weather event coming into play. So let's look at the near term. This is the map behind me of the weighted rejection index and OTMS, outbound tender market share. You see this Joliet, Chicago market right here in dark red, indicating capacity is getting looser. You see this blue right here. That's the Indianapolis market. But I want you to pay attention to some of these road conditions here. So we have the road conditions map. This pink and red area indicates icing in the next 6 hours. So sometime this afternoon, expect icing conditions to move up into the Midwestern corridor right here. And that's going to create a lot of travel difficulties, especially for your drivers. So be on the lookout anywhere moving up through Iowa into the northern parts of Illinois, Wisconsin, Minnesota this afternoon. So Indianapolis market, you notice that that one was a dark blue market. Let's check out what's going on there. Reefer rejections driving a lot of that instability in that market. So we're seeing increasing tightness because of the reefer rejections. I have here in the purple line outbound tender rejection index for the United States. You see the Indianapolis market is moving up in sharp contrast to the rest of the country. So this is a good market for you to target. That winter weather is not necessarily going to hit the Indianapolis market over the next few days. So they are seeing some tightening capacity irregardless of the weather. So anybody that is a reefer carrier, I do like to look out for my reefer carriers out there over the winter because it's still a pretty good time of year for that protect from freeze, especially across that northern tier of the country. You're going to see short haul, local. These are going to be shorter moves traditionally that are driving a lot of this capacity tightness. So be on the lookout for that. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Thank you, Zach, for that incredible update. I want to kind of go back and touch on something that Zach was talking about. He was talking about the Midwest and the road conditions. And that's going to kind of lead me into what I'm going to talk about for brokers right now. We have inclement weather coming in. It's crossing the Midwest right now. And it's going to go up and it's going to go through the markets of Minnesota, Milwaukee, Chicago, and going to cross on over into the Northeast. So looking back here at my map here, this is where the weather is right now. It's over Iowa, kind of above throughout Kansas. You got some icing along I-70 right now, and it's going to move across these markets all right through here. And behind this storm, we're also going to have a cold front coming down. So this kind of leads into what's going to happen with our trucks. Zach said, hey, you know, you might want to avoid these areas because of road conditions, and that's what happens to these markets is trucks will not go to these markets. It'll back up on deliveries because the weather will slow the trucks down. There might be a day behind, and this is going to push back pickups as well because if you're late for delivery, it may take a extra time for you to get loaded, and then you're going to miss your pickup as well. And this is going to push tender rejection rates up in these markets as carriers have to reject these loads because they can't get there on time or they can't get there at all. So if I'm a broker, the absolute best time to enter a market is really a day or two after these snowstorms. Now, these storms are hitting right now, and in some areas they're going to drop feet of snow. So give them the weekend. Let them work through the weekend, and then of course they'll have the roads cleaned up. And jump in and start looking for Monday freight for areas across the Midwest, Minneapolis, Milwaukee, Chicago, Buffalo, Erie, PA. Start searching for freight for these markets that are picking up on Monday or on Tuesday because you're going to see an elevated tender rejection rate because of what's going to happen with capacity. It's going to tighten up because of these weather events. Now, right behind the storm is a very deep cold front coming down. You're going to see lows in Chicago of 7 degrees, highs around 20. This is also going to increase the demand for reefers because of our protect from freeze freight that is going to be affected. So I want to kind of go and look at some of these markets that we're going to be looking at. This is Minneapolis. In the blue here I have our tender rejection rates, or in the blue I have our outbound tender lead times, and in the red I have our tender rejection rates. So here we're looking at tender rejection rates at tender lead times at 3.93 days and tender rejection rates at tender lead times at 4.49 days and tender rejection rates at 38.60%. So already reefer tender rejection rates are jumping up in the Minneapolis market because the storm is affecting that area, right now. And of course they know what's going on, and so they're already increasing the tender rejection rates, which is pushing up spot market rates in this market already. Now moving over to Milwaukee. Milwaukee is going to be affected later on this afternoon, and tomorrow we have tender lead times are being pushed out to 4.66 days, and our reefer tender rejection rates are already up to 18.82%. And right now they're currently falling, but still 18.82% is still a very elevated reefer tender rejection rate. So we have spot market rates well over contracted rates in this market right now. Let's jump across the Great Lakes and go over to Buffalo, New York. This is going to see some effects early next week. And currently right now, we have reefer tender rejection rates at 11.11%, and they're already pushing up. And we have reefer tender lead times are dropping right now, but over the weekend you're allowed to see this turn around, and we'll see tender rejection rates push up just a little bit more because it's weather is coming in, and you're going to see drivers avoiding this area. So brokers, follow these weather patterns and jump in and start looking for loads for Monday and Tuesday in these markets, and increase your rates, increase your margins.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hello and welcome to your Shipper Update. I'm Anthony Smith, your friendly neighborhood economist, and behind me we have the Logistics Managers Index that we're going to jump into soon. So the Logistics Manager Index is similar to the Purchasing Managers Index, something that we went over last week with Andrew Cox. And how you read it is similar to the PMI, where anything above 50 is indicative of expansion within the industry, while anything below 50 is indicative of contraction. So this is a composite measure behind me. And this is something that's put together in a collaboration between Arizona State, Colorado State, University of Nevada, Reno, Rutgers University, Rochester Institute of Technology, and I believe University of Nevada, Reno. My apologies if I've forgotten any of those on there. So one of the things that we saw in the most recent measure for the composite for the Logistics Manager Index is that we saw that it hit a 53.96, and so this is essentially the lowest point that we've seen thus far for the LMI. So this is a survey that's sent out to logistics executives throughout the country, throughout North America, and they really report on different metrics of what they're seeing within their industry. Now this goes from anything between transportation prices, warehousing prices, capacity utilization, all those things that really impact the logistics manager's side of things. And one of the things to note is, unlike the PMI, where it really focuses on the manufacturer side of things, the LMI really is comprised of the manufacturing side and the consumer side, consumer-facing markets as well. So one of the areas that we saw that had a little bit of a increase for the most recent LMI is the Transportation Prices Index. And so when we see that there is this a decline, we see that there's also a decline in the purple line as well, which is outbound tender rejections. Really speaking to that point of when rejections are low, when capacity is really abundant for transportation, that's really going to increase prices to come down as well. But when we see this most recent spike up for the LMI transportation prices, that really coincides with the increase that we saw in rejections rates as well, as we expected to see during the busy retail season. Continuing to break down the LMI, we see that we have inventory levels. And so that was one of the areas that really contracted within the last month of data for December. We saw that there was a really significant decline there. And speaking with Dr. Rogers, Professor Zach Rogers, when we're going over the LMI, one of the things he mentioned is that he really believes that there was a load up before the retail season, and really trying to get ahead of some of those holiday and potential tariff that were coming down line, and really now we're seeing that bleed off here. And so this was one of the areas that really was indicative of contraction within LMI and brought down the overall composite index. Now, one of the areas that we did see some rise in was coming from the warehousing prices. And so one of the things that we also spoke about is when we're looking at warehousing pricing is that sometimes that we're seeing in a lot of these larger metropolitan areas, real estate's getting more pricey while there's still a demand for more warehousing. And so when we're seeing that there's more demand for more warehousing, that's really going to start to bump up these prices, because it's not really coming online quick enough, and really as we're trying to see a more and more populist approach to getting closer to that customer, trying to get closer so you can have those overnight deliveries. And that's really going to be a thing for retailers in the coming months. We're really seeing that increase in prices when we're looking at warehousing prices that's not coming online just quite fast enough. And so that's going to do it for breaking down the Logistics Managers Index. We are going to keep our eye on this on a monthly basis, and thank you so much for tuning in. This has been your shipper update, and this is going to do it for this Friday segment of FreightWaves Now. Thank you so much for tuning in. The fun doesn't stop here. We're always posting content around the clock, so check us out on all your favorite social media platforms, and we have our FreightWaves TV app, so check us out on all your favorite streaming platforms as well. Thank you so much for tuning in, and we'll see you on the next episode.